Welcome to Living in a Double World. My name is Ana Maria Quevedo.
And I'm Feliz Quevedo. Once you have everything needed to request a home loan, you are ready to buy a house.
Make sure you understand what type of loan you're getting, what are the terms, what's the interest rate you're paying, and all those goodies.
The down payment basically varies. We have three different kinds of loans. The first kind of loan, which is an excellent kind of loan, is if you've ever spent time in the military, it's called a VA loan. You're a veteran. If you've spent over 90 days plus being in the Army, Navy, Air Force Reserves, Army Corps Engineer, any form of military service to the country, the government basically says, and the Veterans Affairs says, we will honor that we will give you 100% loan, which means a zero down. They have no down payment whatsoever. That's an excellent loan for somebody that's in the military. Once you have a VA loan, if you get transferred to Florida, you must sell your home to free up that VA loan so you can buy another home VA. But if you have one VA, you can't have another one unless you get special requests from the VA that because of the economy you can't sell your house, or the military transfers you because you're needed. The military will allow you to do another VA because of circumstances that you could not sell your house because you got transferred with the VA. So that's the only reason the VA will let you have two VA loans at the same time. But it's VA basically guarantees the loan for a veteran, which means that if a veteran gets a loan and defaults the loan, that the VA will pay the bank the money. The VA doesn't actually come up with the money. They just basically guarantee to insure the loan. Okay. The second kind of loan is FHA loan, which is a Fair Housing Administration. It's basically a first-time home buyer loan, and they need a 640 credit score right now. It used to be 580. It's gone up from 580 to 620 to 640. VA loan also, they need a 640 credit score. VA and FHA loans were never credit score driven, because all they do is insure and guarantee the loan. But the banks, the servicing banks, want to make sure, and I'll talk a little bit more about the credit score in a bit, but an FHA loan basically is a first-time home buyer loan, and they would like you to put 3.5% down. And the third kind of loan is for somebody that's actually had a home. It's called a conventional loan. Conventional loans are a little harder. They want a 680 to almost 700 score. They want 5% down, and they want that 5% has to be your own money. It can't be a gift from mom and dad. Like on an FHA loan, you can actually get a gift from mom and dad for the $3,500 down payment. Okay, so if they didn't have the down payment, mom and dad can give that gift, or uncle or aunt, any blood relative of the husband or the wife can give the money, which is an excellent way, and that's why they call it a first-time home buyer loan. But on a conventional loan, let's say I have a home today for $100,000 and I've sold it. Now I've made $50,000 when I sold the loan, so now I take that $50,000 and I put the money down towards my next house. Well, let's say I buy a $200,000 house. Okay, and I finance $150,000. So a conventional loan requires a minimum of 5%, but you could put 5, 10, 15, or 20% down. If you put 20% down, then there's something called private mortgage insurance that is eliminated. And PMI basically means that the banks are going to, like how VA and FHA insures a loan, well, for conventional loans, we have private mortgage insurance. Basically it says, okay, Ms. Shaw, you got a home loan. We want to make sure that you're going to pay on the loan. But what if you don't? So there's a separate company that insures the loan. So besides your principal, besides your taxes, insurance, and interest, you now have another thing called PMI, private mortgage. And that actually raises your payment. So you 5% down, 10, 15, okay? You got the private mortgage insurance, but the private mortgage insurance is tax deductible, okay? Your interest is tax deductible, your taxes is tax deductible. So they have made it where you can deduct it on your taxes. So it's not a bad thing. Once you buy a house, the worst thing that you ever want to happen is foreclose on. We've had a lot of foreclosures because a lot of loan officers did loans with interest rates of adjustable kind of loans. And that triggered them to, they started off with fixed for 2 years at 4%, and then after 2 years, it went up from 4% to 8%, and then every 6 months the rate changed from 8% to 12%. And so by the time you hit 12, the home buyer is not able to make the payment. Okay? Some of that was deemed as predatory lending, and basically has tightened the mortgage guidelines in our industry right now. It wasn't really predatory lending. It was that the loan officer didn't really explain the loan program to the client. What's happened is that there is laws that they've put in place now where we have a checklist to ask them, Mr. Smith, do you know that your balance won't change? Do you know that you don't have adjustable rate? Do you know that you don't have a balloon payment? Do you know that your payment cannot increase? So these are some questions that I have to review with my client when I do a loan application to make sure that they're able to understand the program. My loan application takes a good hour, hour and a half, because it is the biggest debt of their life that I'm putting them in. I want to make sure that they understand. It's not like buying a car for 5 years, you know. It is the biggest debt of their life, and I want them to understand the benefits of the deductions of their taxes and interest. I also want them to understand the equity that they're building in the house, okay? And they're buying a house for $100,000 today, and you know, and the appreciation in San Antonio, when they sell the house in 5 years, that house might be worth $150,000. So when they sell that house, they're going to get that $50,000 versus staying in an apartment. They're going to get no equity. They're just going to thin air.
We wish you blessings and guidance to all.
Till next time.